Hello, students. Let me share with you a solution to an exercise on balance sheet preparation or the statement of financial position and classifying the accounts according to their proper elements. Will they fall on the asset? Will they fall on the liabilities? And classifying them as current or non-current portion. So the problem is on the left side, okay? And is presented on the right side. For those of you who cannot see this well, okay, let me just read this to you. This is about Silver Gym that provides personal training and weight reduction program to its members and guests alike. After closing the temporary accounts, the following selected account balance appear on its ledger. These are only balance sheet accounts. Okay, real accounts. Because we have already closed the temporary accounts or the nominal accounts. So what you will see here are balances that you will see in the balance sheet. These are account balances on the balance sheet. Okay? But these are not presented in the proper order. You have your accounts receivable for 50,000. You have your accounts payable for 40,000. This part, this is what we will try to determine. Accumulated depreciation is 80,000. Equipment is 200,000. Land is valued at 400,000. Long-term debt is 300,000. Prepaid insurance is 12,000. Prepaid rent is 18,000. Salaries payable is 10,000. Edgar Samson, which is the owner of the business, is 340,000. Unearned revenue is presented on the amount of 20,000. Now, what is the requirement? Number one, we have to determine the balance of cash. Okay? And number two, we have to prepare a balance sheet where assets and liabilities are properly classified according to its current and non-current classification. So this is a simple illustration, okay, applying the concepts of current and non-current classification. How do we determine that? And of course, your accounting equation, because at the end, after we determine the balances, we have to identify what is the balance of cash. So by now, you should be aware that your total assets will always equal your total liabilities plus equity. If we cannot identify what is cash, we can identify it indirectly by solving for the total liabilities and equity first. Now, as you will see in my solution here, I have already arranged them accordingly. The accounts receivable will fall under your assets. Your accounts payable is a liability account. Cash, of course, is an asset account. Accumulated depreciation is a contra asset account. Okay? Contra asset, but it is presented under your asset portion or your asset category. This is a non-current, no? Non-current account, but a contra asset account. Equipment is asset, okay? Land is an asset account. Long-term debt is a liability. Prepaid insurance is what? Asset account. Prepaid rent is an asset account. Salaries payable is a liability account. Edgar Samson Capital is a capital account or an equity account. Unearned revenue is a liability account. But initially, I haven't classified them according to their current and non-current classification. But if you take a look at our solution on the right, you will see here that the total current assets should only cover your accounts receivable, prepaid insurance, and prepaid rent. And also your cash. I forget the cash. But we have to find out what is the balance here later on. Although in our solution, we have already identified the amount as 110,000. But let me explain it later on. Why is our cash balance 110,000? Okay? But first, you have to know that these are the four current assets. Cash, accounts receivable, prepaid insurance, and prepaid rent. Okay? Your non-current assets will be your equipment, less your accumulated depreciation, and then the land. Okay? They are those that will fall under your non-current asset category. But please take note, although in this presentation, I provided accumulated depreciation as a separate row, but in preparation, in preparing the financial statements, these are usually offsetted. These are usually offset or netted in the equipment. If we will have to present it differently, we can present it equipment net at 120,000. We will have to remove the accumulated depreciation. But for basic accounting purposes, to simplify this one, I presented it, I grossed up the equipment at cost. The accumulated depreciation is presented as a contra asset. That is why amount here. If it was presented here as a positive, we will get the amount of cash wrong. Okay? Now, the total non-current assets by combining these three will be 520,000. This one here. Okay? Now, our accounts payable, salaries payable, and earned revenue is your total current liabilities. They fall on the same category. Okay? We only have what do you call this? One non-current liability, which is your long-term debt. Okay, of course, don't forget the corresponding amounts here. Your total current liabilities will be 70,000. 40 plus 10 plus 20. Okay, your long-term debt is 300,000. You add them, the current plus non-current portion, that will be to 370,000 pesos. Your capital account is 340,000. Notice that there is no more withdrawal account or temporary accounts, right? Only the capital account. So our assumption here is that we have already performed. Actually, this is not an assumption. It is given in the problem after closing the temporary account. So this is the adjusted, the ending capital balance, 340,000. Now, in the bottom area, you see here that it is presented downwards, right? Vertical. So, it is your financial statement presentation. You can also present it horizontal. This is your asset portion, and then you can put it on the right side, the total liabilities. Better if we present it this way. Your total liabilities and capital, combining the total liabilities of 370,000 plus your total capital of 340, that is 710. Now, we know that assets equals liabilities plus equity. Therefore, the total assets should be 710,000 as well. Now, from this one, we can figure out what is the total current assets because your total current asset is already given. What is not given initially is this one. Okay? This portion here. Right? Because this is given, the total non-current asset, we can remove the NCA from the total assets. Therefore, we can do it like this. 710,000 minus 520,000. Your total current assets should be 190,000. But your accounts, your prepaid insurance and prepaid rent, they are already given. So for us to determine the cash account, we have to subtract from the total current assets your accounts receivable, your prepaid rent, and then your prepaid insurance, and then your prepaid rent. And we will get your cash account amounting to 110,000 pesos. This will be your answer for question number 1. Okay, and this is your answer, the solution for question number 2. All right? I hope it is clear to you, the solution. Please let me know if you have questions or if you don't follow. Okay? So that I can assist you. Thank you very much, guys. I hope you got it right. For those who are not my students, before I present the solution, before you proceed further with my video lecture, you can solve it on your own and later on if it matches my solution. Okay? Until next time, I'll see you around. Bye-bye.